Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendhal with tonight's Deep Dive. It is August 15, 2018. I'm going to take a look at cotton today. At least there's a number of different ETFs. BAL is one of them. There's derivatives. But what we're looking at with cotton is kind of a cautionary tale where we have the trends all pointing to the downside, but we have now the technical rating, which is basically moving sideways, which is kind of a precursor to the fact that the market might be basing here soon. It's in a volatile stage, and so I think that what we're going to see is probably a little more continued volatility, but still nonetheless be something that we want to actually take a look at. Just recently we had a surge low that is an indication that you want to start taking some profits. That's really the upshot of this particular presentation. If we take a look at the pricing action, you can see this nice sell-off, and we broke below this resistance level today. It's kind of hard to see it, but we actually broke below that particular level today, and that level being at 81.85. We're at 80.74 right now. This level right here is going to act as the next level of support. It is actually at 80.96. We're just a little bit below that, but that is where the support is to the market right now. And then if we're able to break this level, then our next level is at 78.45, right through here. That's a nice sizable sell-off. The cautionary tale here is that the market is very much oversold right now. So either the market is going to continue this volatile, really strong surge to the downside, or we're going to get this quick little bounce. The market will find some support at this level that I was referring to over here at the 80.96 level. Now the systems themselves have a really nice open position profit. Here is cotton right through here. You can see that a lot of the markets, Australian, the euro, gold, corn, soybeans, sugar, they all have nice open position profits, and cotton is doing pretty well by itself. It in itself has been short not that long. We've got 3 open positions on the short side. We have the one that triggered here on the 10th of this month, and then we've had a couple of other ones that are more recent, most recent one having triggered here today with the sell-off. So we have a nice open position profit. The key here is how far is this market going to really fall, and the fact that we're in the midst of this sell-off, that's something that is more of a cautionary tale. Now if we take a look at yesterday's action, what it was looking for was a bit of a support resistance gap, meaning that the market had potentially sold off to this level, and once it gets into this zone between 80.96 and 78.68, there's really little support to the market, and we're actually in that stage right now. So that market had better stop and reverse here by tomorrow, or we're going to see very little resistance to the market, and we could actually see it potentially coming down to 78.68. So that's a nice sizable sell-off here, and the fact that we're short the market, we have a nice open position profit, all is good for us. The only exception is that it's very much oversold, and when you get into that oversold condition, a lot of the times, quite honestly, you see a stop and reverse, the market bases, it goes back up and meanders, and then potentially sells off again. But when we get into this case, sometimes it can accelerate even further. So I want you to watch this 78.45 level, this one right through here. That's going to be the next potential down leg to the market. So in watching this market, the fact that we're short and we got a nice open position profit, we can afford for the market to stop, reverse, bounce, kind of gyrate a little bit, and then show us that it's going to sell off again. If for some reason it doesn't, it kind of gyrates, goes sideways, goes into consolidation mode. In other words, then we would expect the markets and the systems to react, take profits, and then live to trade another day. But this is where it gets exciting because we're in this secondary phase. The sell-off, that's great. That's what we're always looking for. Then when we find support to the market, how is it going to react around that support? And if it doesn't hold here, is it going to accelerate to the downside, or is it going to find some opportunity to stop and do this type of reversal? It's better when you have an open position profit than when you're just establishing positions. So that's why I'm pointing this out, that whenever you have an opportunity, you have a short position out there, and you're looking at this resistance gap, if you will, or support gap, I should refer to it, that if there is no support to the market and there's a gap there, that's a really good position to be in, because the everything's in your favor from a risk reward perspective. So we're in that stage right now. So I'm basically pointing this out so that you have a really good feel for what to do when you're looking at support and or resistance gaps, and how you can take advantage of that. And in our particular instance, with the sell-off and the fact that the market's oversold and the fact that we broke below some support levels, we're kind of in the driver's seat right now and looking for the market potentially to sell off. If it doesn't and it consolidates, we still have a nice open position profit. Maybe you would give back a little bit, but we have a very nice opportunity that if the market is able to fall down to this level of 78.68, well, that's even better for us. So let's see how things kind of play out here. But that's really what I wanted to at least focus on with this particular deep dive. So with that, we will stop and we'll take a look at another market tomorrow. Thanks so much. Bye-bye.